Good morning to all traders and welcome to today's market insights video provided to you by Orbex. Here is Stavros Stusios, Head of Investment Research, and today I'm going to talk about the FX miners, Aussie yen and also the euro pound. I want to talk about Aussie yen particularly because we are in a risk of environment at the moment, and actually seeing the last move, the last drop in equities following Trump's announcement to ban European flights to the US. I see the Aussie yen going down along with equities. And when keeping in mind that the coronavirus worst isn't there yet, I believe we're going to see the Aussie dollar slide lower until at least we get some slowdown from the coronavirus. Now, of course, if we see a deal in the oil market, that could also support an upside on the Aussie yen, as well as the oil, of course. In the nearer term, I'm seeing just purely on coronavirus, the Aussie yen moving lower. That is actually contrary to what I see on dollar yen, but dollar yen we're going to talk probably about tomorrow, right? And the euro pound, of course, we've had the BOE cutting rates. There is now going to be 12 billion of funds allocated directly for coronavirus treatment. There is, I think, a total of 30 billion. Actually, the BOE is the only bank so far that has collectively acted on fiscal and also monetary policy perspective in order to support businesses and the UK economy. A very good move, if you ask me, the most respected so far worldwide. So without further ado, and as you have seen, actually, we are talking about the 8-hour chart here, providing more insights when we're looking at such moves, of course, right? Because volatility is still very high. Back on the chart, I see this as primary 1, primary 2, and I'm waiting for primary 3 to actually take prices near the 60 level, right? So there is still a lot of room to the downside. This can be also an ABC. However, it doesn't change the view to the downside because it can still be impulsive. Now, in the intermediate degree, we see 1 and 2, and I'm waiting for wave 3 to come in, right? Now, if we take it with the multiple degree perspective here, right? We've had 1, 2, 3, 4, and 5, and in the bigger degree, we'll have 1, 2, 3, and this is likely now is going to be most likely 4. I am expecting this not to be a sharp correction to the upside because this looks quite sharp. I'm expecting this to be a sideways one, respecting the rule of alternation in Elliott waves. And then from here, I'm seeing this wave 5 taking out the previous low for intermediate wave 3, then intermediate wave 4, then intermediate wave 5, and down around the 60 level, okay, which is the 161 extension of waves 1 and 2. I'm looking for wave 3 and even potentially wave 5 if this turns out to be a 5-wave impulse to the downside rather than a 3-wave impulse to the downside. Now, since we've actually pretty much taken out the 69 level, we had a false break over here. Is the 38-point Fibonacci retracement as well. We're going to see this, we want to see this level actually holding to support our view, right? In case we break above that level, most likely we're going to get a more complex pattern, potentially a combination over here. It's going to take us up to the 70, 50 or so, and then start looking for prices to move lower. But as I said, I see this triangular formation taking place. Euro pound, actually, we've talked about this scenario for a while, right? We looked at this as a top, and we're looking at this becoming an A, B, and a C. These actually lines and these levels have been drawn here for months now. Let's just say maybe for a few weeks, right? We've seen this move correcting down to wave A, B, and a C. I'm expecting wave C to move a little bit higher to the 88.75, 70 or so. It's not far from there, to be honest, but we could move a little bit higher just to take out this confluence level, which is the 61 Fibonacci retracement of this move, right? As well as the 61.8 Fibonacci extension of the upside move, okay, over here. So a very, very strong there. From there, we are most likely going to see an impulsive move to the downside to take out the 81.50 at least, and potentially could even move lower. I would find the 79.23 a bit excessive. This is actually the 81.78 is the wave 1 top which would actually help this correction maintain an impulsive structure as the previous high of wave 1.